All right, all you devils, how's it going? So here we are, let's see, about 12:30 for me on Tuesday, and finally able to introduce to you, well, not only the tools, but the company that we've partnered with here to bring these, what we think are the best smart money concept price action tools available to you on TradingView. So now, of course, I know some of you are very interested in this. Others, well, maybe perhaps it's a passing interest. Or you're just kind of curious about it. But let's get right to the heart of the matter. I know the first things you're going to want to know is what does pricing look like and what are we talking about here before you take a deeper dive into this. So let's get right over to the website here, because as soon as I turn it on, I know many of you are going to pause and jump right over there. So let's just head to it. So this is Sonarlab. Right? Sonarlab.io is their website here. There's a lot of info here. They are a young company, but they are very active and growing fast. And some talented people attached here, some very talented coders and management as well. So they're doing a great job here, and we're pleased to partner with them. So let's start right here. So, of course, a 7-day trial is available to you, which would make sense here, but that'll take you over here and take a look at the price points here. So $59 a month, $139 for a quarter, and $449 for the year. We think pretty reasonable. If it's not paying for itself, right, that'd be the kind of thing you'd drop pretty quickly. But if you're using it and you're kind of working with it, I would think that this would be an absolute no-brainer. Now, in addition to that, they've been kind enough to offer us a little discount for Trade Devils members, so we got you another 10% off on that. So, and that would apply to all of these. So if you were, for example, if you did the 7-day trial and you wanted to go for a month and see if it was adding value to your trading experience, so you could do that. That would take that 10% off the monthlies after your 7-day trial is up, and then you'd just have full access, and then obviously monitor whether or not it's adding value for you. As I've said many times, it's not designed to replace what we're already doing. It's designed to augment that. And I think as we go through some of this, I think perhaps you'll see that. That said, many trade this exclusively. It certainly lends itself to that. But for our purposes, I think it fits in really nicely with some of the things that we're already doing. And hopefully you'll start to see that as I incorporate it into more and more content, whether it be live streams, Bitcoin vids, or traditional, anything that we're doing. There's a place for this, and I think hopefully you'll start to see that as we work through it. So if you, and of course, if you wanted to, you could go over and grab the trial and you could go through the video with me. I mean, if you wanted to, otherwise, right, watch this, see if it seems appealing to you, and then download the trial and have at it. It's a full working version and good for seven days. So let's just start out here. I've got what have I got here? A 4-hour ETH chart here, and I've got the only thing I have on now is just the God MA, just to kind of keep the chart clear. But most of you know I like that. It's kind of a proxy for the Vegas wave. It's 200 EMA and SMA averaged together. So just a nice, okay, where's the trend, right? Are we above, below, and kind of a thing, just for a kind of a visual reference. And let me put their indicator on. So, let's see here. So if I put, it will be under invite only scripts, and then you see their suite of tools are down here under Sonarlabs. We're going to focus on smart money concepts today. I'm going to circle back here. We'll look at Liquid, which is more traditional technical analysis. Got some very powerful tools in that as well. That will be a separate video. We're going to focus on the smart money concepts because that's the core of it. And so we'll focus on that. So I've already got it on the chart. So let me just go ahead and apply it. Now I have just the most rudimentary features turned on because what I thought I would do here is just go through one at a time so you don't get overwhelmed if I have everything on right at once. It can be a bit much. So right off the bat, right, so those of you that have watched the videos, and I'm assuming if you're at this point here and you're watching this video, you've at least perused that first video that I did where we went through the theory of this and how we define trends and changes of character and breaks of structure and the strong high and the weak low, those kind of things. So you'll see here now on this 4-hour chart, I just have it applied here to the most recent price action. So I'm going to start there as we go through some of the settings and parameters here. And there's quite a lot in here, as you'll see here. So let's start right at the top. Let's see. How do I want to do this? Well, I guess we can do it over here. So the very first thing to start with here is called focus mode, right? So if that's on or off, it's just, well, here, I'll do it that way. All right, so if I turn it off, I'm going to get all the changes of character. I'm going to get a lot of history here. Oh, I'm not sure how far it goes back, but it goes back quite a ways, which perhaps is not necessarily relevant. Oh, is this change of character relevant to us over here? Perhaps not. So thus, and I think also as well, this can be a bit, it can interfere with the TA that you're doing. So perhaps, at least I find it that way, that all of this, so for example, if I had an Elliott count or if I'm measuring fib swings, that kind of thing, I really don't want all of this over here. What I want to focus on is what's on the hard right edge. So thus, I almost always have it in focus mode. Right, so I just want to focus on what's happening here on the hard right edge, right? So I can look at, okay, it's not too hard. Oh, we've been through this now. Okay, so where's the trend? Right, here's the change of character. Right, we don't get a break of structure, but this is a high that doesn't do its job, and now we get off. It breaks that high, change of character. Right, see, and as I said before, you could do this all yourself. You could mark that, all of these. What a giant pain in the ass, right? I mean, many, until companies started developing a product like this, that's how it was done, right? In the FX market for years, right? And still to this day, right? Many just do it by hand, right? So it's certainly doable, but how nice to have a piece of software at that price point. It's, we think, very, very reasonable. Do it for you. So let me zoom in here a little bit more. So as we are looking here at what's going on, well, we can see the very last couple of things that have happened here. So here's the last break of structure that gives us a change of character. Now I get another little swing up here, another change of character. This becomes the dominant high because it gives me the swing down. I doesn't take it out here, so eventually I get another change of character here, right? So this is the high that produces that change of character that leads to that break of structure. And it's very much like we talked about, you get in that kind of a range, and then one side's going to break, right? So there it is. Just as we talked about via the line drawings here. So here is the last break of structure. So this is the strong high. I don't yet have a low because there's been no change of character to define the low. So hopefully you follow me there. This is come here. This is the last high that did its job, right? That broke the low. Now here I don't have any low, right? So this could easily just keep rolling over, and we'd head down, down, down until we got a low that gave me a change of character, and then perhaps I get a demand zone here, and the trend turns around. Perhaps. But what I want you to see here is by focusing in here. Of course, if we were as Elliottians, we'd probably be thinking something along those lines. Right, so these little nuances here, and you can get the text off of there and just look at the lines if you wanted to, but this shouldn't interfere with any of the analysis that if we did it here, right? ABC, we could do it that way. Not to digress into that one. ABC 1, 2, 3, 4. Okay, it could be, but my point being, of course, a couple of choices. One, turn it off, right, and then now just turn it back on. Say, okay, how does that fit with swing structure? Something to think about. All right, let's carry on through some of the settings. So focus mode. It's just personal preference. I think you'll find that will be where you'd want to start. Let's get rid of these. It's back here. Okay, focus mode. Now this coloring the candles. It's, if you wanted to, you have that choice, right? Bullish, bearish, right? It's just up to you, and of course you can change them. If you want bearish to be red, that's just fine, right? So when you touch some of their content, it'll change the colors. It just depends whether or not that's a preference that you have. Lots of alerts. Now, my guess is you'd probably not use all of these, but there might be one or two that you find that are important to you. So, for example, bullish break of structure or a bearish break of structure, something that's significant, you might want alerts to go off on that. But you got also, these are all the kind of things that it's tracking, which you can set an alert to, all on, or this just turns them all off. I tend to, if I'm going to do anything, it would be the bullish and bearish break of structure, just to draw my attention to it. Let me keep going here. Okay, now let's see. I guess we'll do it over here. Now we have the dominant swing structure here that you see in white, right? So that's the breaks of structure and the strong high, strong low. That is what we're focused on here. So if I were to turn that, I can turn that off and on, and now I just have the internal swing structure, which I have coded in orange. But the dominant swing structure here is in white. So I have the choice. Do I want to show the current high? Yes, I do. Right. So I would encourage you to keep that on. You can do all highs and all lows if you wanted to. I tend to just keep that off. Right. I want to see breaks of structure, not necessarily just highs and lows. Right. So it's just a choice. Fake out detection. Well, here's a decent example here, and I would encourage you to keep that on. So when we get wicks that go through a break of structure here, is that a break of structure? Well, this here, you literally have one bar that goes through by a tick or two, but really it's the solid close above the breaks of structure here that would define that more cleanly. So my suggestion is keep that on, because really all it's trying to do is never the first click, is just keep you out of that wick structure, right, where we're just getting pumps up here. So you can look at that and say, what's likely happening up here? There's a bunch of stops getting run, right? Liquidity grab, one final push for same thing, right? It's a grab for liquidity up here. Those rejection wicks kind of tell you, hey, heads up, then which all lead to this first change of character, which leads to the next, and now we get into a zone, and there's the break. So the kind of things that you'll learn and your eye will start being drawn to, but that fake out is kind of a nice feature here in that you don't get sucked into these, that's who's buying up there, right? Retail. Oh, let's keep going here. So I would encourage you to keep that on, keep fake out detection on, and strong candle body. So, and each one of these has a little pop-up. Right, so the candle body that creates the break of structure must be this, whatever number you use here, % bigger than the rest of the candles. So you need something like this, where you've got a big candle where it's 35% or greater of the body of the candle. That it must be bigger than the rest of the candles that are close by. So the thought being that like this one here, just a big wick, right, is just a fake out, and you don't have the candle body going through, just wick. So again, I would encourage you to keep that on, right? You can experiment it with you like, so it's not likely to create any damage to your trading. So I'd encourage you to keep that on. Now, equal highs and equal lows, same thing, right? You just put your mouse over that little info icon there. And this is going to just draw your attention to equal highs and equal lows. I actually, per their suggestion, keep it on about 6. So thereby, if that's the case, here, I'll do it that way. It wouldn't necessarily have to be a straight line, right? It could be like that. What you're looking for is potential liquidity grabs. Let's see if I've got a decent example. This might be, you might use it here, right? So is this, right? While it's not a straight line there, you could probably make a case here that all of this was just liquidity grab. Right, up before it goes down. So that's the thinking there of equal highs and equal lows. It's just a place to draw your attention for potential liquidity grab before they take it the opposite direction. Right, it's a decent example right there. Let's get that off here. We'll get this one off to the side here. Let me keep working through this. Okay, swing structure. So candle body, equal highs and lows, we've got that. Now, break of structure, this is important here. Now, it's your choice, but I would encourage you on breaks of structure to keep that at close, just like we were talking about here. Is that the break of structure you want to identify when it's just wick? Nope, I would tell you hold for close. But you do have the choice of wick or close. I would encourage you to keep it on close. Now, this is a new feature they just added here. This is, so let's see, how do I want to do this? So if I were drawing something here and I had a retrace that was only, say, 15%, now, would that be considered a meaningful swing, or something that would be part of the internal or external swing structure? So if you have that set at, I typically keep it at about between 20 and 25, right? So if it's a little baby pullback here, that's, let's see. It's something like that here, right? It's just too small. You don't want that to be part of your swing structure, but you could set it to, but I only want to have it count as swing structure if it's 50%, or you set it to your heart's content. But I think about 20-25 is a reasonable spot to use for that swing structure, to have it identify as part of that swing structure. So 30, or I usually keep it at 23, right? For 23.6 or 24. Or 25, right? Whatever, you want to get a little cushion. 25 is probably a safe bet, right? So you're always going to get that as identified as part of your swing structure, internal or external. So that's something to consider. Of course, the other option is just turn it off, right? And it'll just use the prior algorithm, which will just be the price action. If you're trading on FX, you could do the same thing in pips, right? How many pips down before it's part of the swing structure, right? I like it, so I keep it about 20 to 25. Break of structure, line, arrow, or dashed, right? Line keeps it pretty simple, right? So I think that's good here. Now, if the break of structure here is set to normal, you can change that if you want it smaller, larger. Color choices, whatever you want, right? Some people like to do bullish, green, bearish, red, right? I just like to keep it simple here when I'm doing this kind of analysis here. Okay, so that pretty much covers you on all the dominant swing structure, right? So this is kind of a good prototype to start with. Now, once we are finished here and you've got the dominant or the major swing structure taken care of here, now you have the choice as to whether or not you want to highlight the internal market structure, right? So if you think back to the first video we did where we looked at how the internal swing structures, that's all happening, but it may or may not affect, trend based on break of structure. So this will give you the capability to identify all of the internal breaks of structure or changes of character that are happening, but you can almost think of it on a lower time frame. Now, you could turn those all off, right? You don't have to have them on. Some people prefer to do it that way and just, maybe you're pulling fibs or, you're doing something that you don't want that additional information. You could stick to just the dominant swing structure. It's your choice, but I think my suggestion would be when you're starting out, turn these on so you can, because that will influence where you're going to see supply and demand zones. So I would encourage you to keep that on to start with. Now, once you get some experience, it's assuming you're interested in pursuing this or adding this into the trading that you're already doing or how you analyze the market, then maybe experiment based on your preferences. But to start with, I encourage you to keep that on. Again, color choice is up to you. This is what I'm used to, so I just do orange and dashed. So I make that distinction, but not only between color and then just whether it's solid or dashed, whether it's internal or the dominant. So break of structure here, same thing. Now, pardon me, as I get down here, so I'm on internal. This is the internal. So do I want break of structure to be close or wick? I would encourage you to keep it on close. Break of structures, just as we were talking about line, arrow, or dashed. I like dashed. Now, if this was annoying to you, is too big, I can make that small. Right now, they just got tinier, or I could just turn them off. Oh shit! Here, where is it? Oh shit! So if that was annoying, and you're like, God, I don't know, it's too much stuff on my chart. Well, you could just do the internal swing structure just without any text. I mean, in fact, that may not be a bad thought. It's just, the advantage of having the text turned on, can you quickly ascertain, oh, wait a minute, is that change of character or is that break of structure? Wait, right, so that might be something to consider. Again, particularly when you're first starting to use this. So my suggestion would be leave that on until you get to a point where you can identify these pretty easily, and then you may or may not want the text on as well. All right, so I think we got that covered. Now, moving down, let's go into the language that's common in SMC terminology would be order block, but no, as you heard me reference that in the first videos that we did, supply or demand zone here is equally valid, but it's somewhat interchangeable to a degree. There are different types of order blocks, so just keep that in mind that it's. Again, supply demand, you call it order block if you like, but I think supply and demand is actually a bit more universal here, and you won't get caught up into the different types of order blocks here. It may or may not be something you want to pursue. If so, we can get into that in additional training. Okay, come back here. All right, so where were we? Now we're back down to the order blocks and how we want to identify them. So right now, what I have it set is to just mark the order block candle. So I have it in white. So here's an order block. Here's an order block. So you can see here, if we go back, order block, order block, order block, right? So you can see those are marked, which may be, again, when you're starting out, I would encourage you to turn them on. But once you get a little bit better with it and you understand, okay, why is that an order block? Why is this the order block? Because that's the low that produces the change of character, gives me the break of structure. Why is this an order block? Because that's the down that gives me the change of character. Oh, where's my next one? Why is this an order block? Because that's the low that gives me the change of character. Why is this, right? Because that's the low that gives me the change of character. So once you're comfortable with it, you may not need them on, but it is kind of handy, particularly when you're starting, or you could just turn them on off. So for example, let's get them turned on here. Oh, let's come down here. And where's my order blocks here? So show order blocks is on. So I'm going to turn to order block zone here. We'll get to the rest of what's in there in a second. So you'll note a couple of things. First, mark the 50%. That's the 50%, the halfway, the premium discount. We talked about that in the first video, the halfway part of the range of the order block. All right, so that's one option for you to show. I don't know why you wouldn't, but some people, if you don't want it, here you just get a clear box. All right, up to you, just personal preference. Now, when do you want to make the order block invalid? So one close above, or two closes, or the wick. I would encourage you to perhaps start with 1 or 2. My default keeps it at 1. So if it breaks, okay, it's invalid. All right, been broken. Draw bullish order block. You give you choices here. Do you want to do high, low, high to close, open, low? So you got some things to play with here, in terms of how you want to represent them. That's going to change. Oh, let's see. Let's do a bearish. Let's do the bearish. Let's do close to low. I don't know why you do that. Oh, let's see. There you go. So you see, here's close to low. Close to low. Right. So if you just, I guess it would be in the interest of just refining the order block. If for some reason you wanted to do that, I don't know why you would, but I'd keep it at high to low. So you're getting the full candle. And then if you wanted to dial down, or maybe only take the 50%, or only when we get in the premium or the discount, maybe something that you would modify there on the fly. But again, as you're starting out and you're still learning this, I would encourage you to just keep it on high to low. Same, both of these the same on the high to low. Maximum order blocks to be drawn. Well, okay, so 3 is a reasonable number to start. That would be bull bear. As you can see, I have 4 on here. So maximum bull or bear, and then the width here, those are reasonable starting points. Now, the danger with having more than that is, I've still got order block marked here. The danger with having more than that is that your chart there can be order blocks that have not been invalidated that can make your chart kind of a mess. So if you were, for example, if you were out of focus mode and you had all the prior swing structure on, and you turned on 20 order blocks, you're going to have order blocks all over your chart. So my suggestion would keep it at a reasonable number here. Let's go ahead and let's turn these back to order block zones. Let's keep it at a reasonable example. So now you see all those little zones that we talked about here. All right. So nope, what's happening here? So we've had this big run up. Now what's the current trend? All right, well, that's right. I'm assuming you guys are, we don't have to think about that, right? So here's the last breaker structure, right? So here's the swing high that does its job. Here's the next high, does its job, breaks the low. So we've got a downtrend going on at this degree. All right, now, well, that's at a 4 hour. If I go to a daily, I probably got an uptrend, because what are we doing here, right? Right, so let's be clear. We don't throw everything out we know about technical analysis and algorithms and things that we know about the market just because we're introducing some new tools, right? So what are we doing here? In between the 50 and the golden zone here, bumping into a demand zone here. Now, you'll note here, there are wicks that go through the low, right? But since we have it set to only invalidate the block when we have a close below, those become valid. Right, so good example. Now, if that were to break, of course, look where the next one. Look where the next one is. Right here, golden zone. All right, so and as you'll recall, what we'd be looking for here is not necessarily, oh, we're in the block, let's buy. It's, oh, can I perhaps go from a 4 hour down to a lower time frame and look for that kind of flip structure where we might get, oh, there's the change of character. Now we're coming back down here to test that supply zone here and see if we get a reaction out of that, right? So that which is so consistent with what I try and teach you guys, which is never to sit here with a limit order and try and catch the falling knife. Let's wait for that little retrace. Now here, if you got that change of character, oh, hey, maybe there's a scalp, but if that comes back down here, there's your full flip. Now you're looking for the long. First target would be the last high. Now in this case, it's a downtrend because that's the strong high. Right, so as to whether or not you're taking that would be a function of, well, here on a 4 hour, the trend is down. If I were to go to a 15-minute off of that little move, trend might be up. Right, so that it's just that movement back and forth between what time frame are you analyzing on, and then what are you trying to do? So here, I mean, clearly, the trend on the 4-hour is down. So this would be very much of within this swing structure, this would be a counter trend play. All right, but if we went to the 8-hour, where's the swing structure, right? Right, that's a strong low because, well, that's actually a good example. Okay, so we go out to an 8-hour here, and while this is a downtrend happening on a 4-hour, it's an uptrend on the 8-hour, right? Because all we've done is just swing and retrace. Here's the last order block, swing, retrace. Now, do we know the outcome here? No, we don't. Of course not, right? We won't know until we see what happens here. Does it take out that high? Well, then the uptrend is sustained. If we get this and we don't get a new high, and all of a sudden we get a low that does its job and produces and breaks this low, well, then I got a trend change here out on the 8-hour. Right? Again, it's part of the appeal here is there's no subjectivity to trend. Where's the last break of structure? Where's the last change of character? We can look at different trends at different time frames, but there's no subjectivity about the trend as we're looking at it on that time frame. Right? That was part of the appeal, I think, particularly for Elliottians who, you know, you've heard me say many times, right? One Elliottian sees an impulse there, the other one may see an ABC. Right? I mean, pretty good example here of some of the reality that we deal with. Now, is that a 5 or is that an ABC? Right? We're not sure, right? And again, two Elliottians might give you two different answers there, but there's no question about what's just happened here, right? So this part of the trend is down. This part of the trend is up. Right? Swing, retrace, all the market ever does. So there you go. So if you were looking to be a buyer here, you know, you might take it down to, you might go from a 4 to a 1 and see how that looked here. Let's let it process here. So here we go, right? We're just in a little order block here. Now, why is that the order block? All right, let's just be clear about that. Why is this not the order block? Because this didn't do anything. Right? It went up here, no change of character, didn't get those lows. All it did was just retrace. Now here, did it do anything? Right? Oh, it got to here, but then it retraced. Right? That was not a break of any of this. So this is actually, because this is the low bar. Come here. This is the low. Gives me that change of character, right? So that's why this becomes the demand zone here and not this down here, because they didn't accomplish their task. This is the low that did its job, right? It gave us that change of character right here. And note here, it's change of character because I have a close beyond that pivot high, right? As opposed to here, it doesn't do anything, right? Here, this is the low that gives me the break, right? So that's why the demand zone is left back here, right? So would that be, so if we just look at that, do you want to buy that? Well, if you did, I'm not saying, well, if there's the high, I can't be a buyer here. That's not what I'm saying. Just you would want to be very, very mindful of the fact that you're putting on a counter trend trade. So just look at the God MA, right? Where are we in relation to the 200? Right, well below. So you maybe talk yourself into saying, well, that'll be a median. The 200 and the 50 tend to be magnets. So if we're going to head back towards it, maybe you want that trade. Maybe you do, but just be mindful that that's a counter trend trade on the 60 minute. That's the strong high. That's the last high that gave me a break of structure that did its job. This is the swing low. I guess I should mention that their abbreviation here. SL, that's the swing low. This is the strong swing high, right? But this is the dominant here. I've been doing it this way. If I can find it. Oh, where'd it go? This way, right? So here, there's the last high that did its job, right? This one. This has, we don't know anything yet. It's just, it's a swing low. Right, I'm assuming, right, this makes sense to you guys. Right? It's not rocket science, right? So if we do this and we do that, right, downtrend continues. But that doesn't mean you couldn't make money here. All right. Okay, so let me keep going there. Let's see. Let's go where did we leave off here? Flip zones, order block zones. All right. Let's. I think we're pretty clear here on how you want how I would recommend you set this up to start with. So I started with order block zones. Now, let's talk about this because you're going to be curious and you're definitely going to turn that on. You're going to want to know what the hell that means. Okay. So a flip zone, as they use that language, you'll see it called different things here. So it's kind of what we're talking about. You've got different types of order blocks. So in the SMC world, a flip zone, as Sonarlabs is calling it, you might see it referenced as a breaker block. So, and really, it's a very simple concept. All it is a demand or a supply zone that failed. But you'll find that the market will often come back and revisit those zones. Oh, let's see if I can find a decent one here. Oh, I suppose this would be all right here. So here's the let me draw it here. So this was the zone, right? Let's do it this way. This is actually a good way to do it. If you're going to draw them in, which you'll find yourself doing, I just use the GAN box, right? So you can do that. Oh, here, right? Just do it at 0, 50, and 1, so you get the midpoint. Personally, I have a very small background, but you can take it out if you want. I just like a little bit so I can see it's there. I don't want any labels. I know what it is. I don't need to see 1 and 0 and 50 there. But it's your choice, right? But that's how I set it. So let me draw this one again. So here is the little demand zone that was there, right? So it comes back down to holds, right? We don't get a break below the low here, shoots back up here, but now comes back down. And here, with that change of character, we have the failed demand zone. Right? So in here, you're anticipating it would hold. That's why you get this coming back all the way across here. So the market comes back up. Oh, maybe not the best example here. Let's see if I can go to, I had a better one in there. Oh, here we go. Okay, much better. I knew I had it. I was on the wrong time frame. Okay, let me try that again. All right, so here's the last low that does its job by giving me that break of structure up here, right? So here was the demand zone. As the market came back down to it, you see the reaction, but eventually we get closes through. Now the market comes back here and we waffle within that zone for quite some time. So what was the demand zone here now is being revisited for a potential supply zone. So you see the overlap. And that's why they fade it, which I like. So they take out the center line and they just fade it in the background. So I know just looking at it, oh, that's a breaker block, or a flip zone as they call it. Let's use their language. There's a potential flip zone there for that to flip from bull to bear based on how the market reacts here. So this was potentially to carry the trend on forward. Demand zone that was left behind comes back, revisits, we break, now we come back to it. So you get a combination of things. You've got, which is ideally the confluence you're looking for. Oh, what else could we find here? Oh, let's see if we got, there we go. Okay, so here's just to kind of dial into, okay, let's not lose track of our old friend here. So this being the case here, we've come back to it and we've got this nice little 3 here, this nice little in the range, right to the 50, where I've got not only a supply zone, as you see here, right, with the center line, I've got not only that supply zone, but I've got a flip zone, right, or breaker block, flip zone here, right, which now look where we go, right? So here's first target, second target. Right. So again, I'm going to emphasize this fits in nicely with everything you're doing. Right. So you don't have to change anything. It just may be an additional point of confluence that you can use. Right. And then again, clarity. What's the current trend? Okay. So you guys often will send me charts, ask me things, and so okay, what's the trend? Might be the first question, right? So we can be in agreement. Okay, we're clear that currently on the 4-hour the trend is down. Trend is down. Right, so we don't have to be interpreting an Elliott count here to say, well, wait a minute, okay, that's the impulse and that's the correction, right? The trend is still up, we're just correcting. Again, I think you'll find that specificity will be advantageous to you. All right, let me keep going here so I don't go on for 3 hours. Okay, so we've covered, this will take some getting used to, the flip zones here. I would encourage you to get very, very solid on just the order blocks. Just the zone here. So now I've taken that off. Right now, you could look at that and say, oh, it looks like there was one that probably failed there, right? So because you can look at this and say, well, that was there. It was there. You could do it that way. Say, oh, I see the order block here. As you get better, you may not need it to show you, but when you first start out, having a piece of software do it for you so you don't miss them, I think you'll find will be very, very favorable. All right, let me keep going here. All right, so now we're back to order block zones. Invalid after one close. You might experiment with two, right, if you want more confirmation. Color choices, whatever you like. Higher time frame. This is, if we turn this on here, I'm going to get the high, low, and center point here of, let's see. Oh, pardon me, I would set it here. So I'm on the 4 hour, so if I wanted to see, the 12 hour, right, I could turn it that way. So now I can see the last zone on the 12 hour is up here. Oh, it's just something to experiment with. I don't use it, I haven't played with it much, but it's, perhaps that's something they're going to put more time and attention on. For the time being, it's up to you whether you want to do a little experimenting with that. I leave it off myself, because I'm focused on what's happening right here. Now let's talk about the fib retracement. So we give you the choice. They give you the choice here of whether or not you want to show fibs in this fashion. So you'll recall that. Oh, even if we did it this way. If we look at this is the swing high and this is the swing low, right? So we looked at the idea being that if we're in a downtrend, where we want to get interested is when we get above the 50%, so we get into the premium zone for the potential sale. For a number of reasons. One, that's where we're likely to find the order block. That's two, the risk reward is always going to be better here if we're selling at premium with a target down here, because this is the weak low. All right, let's not lose track of what we're aiming for here. I always forget where that thing is. Right, that's what we're aiming for right here. This is the strong high. So if we're in this and we're in a retracement, we're looking to, if we were to get short here, this is the target. That's the target. So your risk reward right off the bat. I mean, it seems so obvious, right? But just so we're clear on that. So let's think about how the fibs can be useful. Well, with nothing but the 50, you can already see it. But then, of course, why not do this, right? If we know the value, why not do it that way? So if we're coming back here and we're going to hit 50 and then we're going to hit golden zone, oh, well, heads up. I don't want to. So look here. I don't want to go, oh, well, I can't take that trade even though it's at a golden zone because I'm not at the supply zone. Okay, let's be mindful of that. Again, reminding you that the intention here is not to throw out of the window everything that you have learned, right? We don't need to wonder whether or not there's an algo there. We know there's an algo there. But this is a great option for when it breaks this. So in this case, let's say we break there. Okay, so now you're into a demand zone. You think, oh man, I'm sure I broke the golden zone there. But did it, right? Did it really? Or did you just move to a different pivot, right? Because that's what the algo is going to do. So now as that's coming back here, and you're at the dominant to dominant, right? So as I would, I got to be careful here. This is how I would use it, right? So I'm going to use the highest high to the lowest low because that's what the algorithm is going to do, right? So this little pit stop in the midpoint here is meaningful to me, and I would certainly be interested in this trade here. Right here for that potential, but if it breaks, it's not like I would take this trade, right, if it was consistent with everything I saw. But just because I'm not at the supply zone doesn't mean, if I'd never take a golden zone again, obviously. But if it got through here and I was like, oh, well, let's see, wonder what would be happening there. Do I want to sell it up there? Because, and this, we talked about this in the video. In the video I did where I was kind of introducing this. This is a hard trade to take because it's doing this, right? Do you remember that drawing? You're like, whoa, that thing's ripping higher. I can't sell that. Can you? You can't? Well, but the point being that if you did sell that there, well, I'd like to think you know that I would tell you that's a horrible, not just a horrible, that's the worst possible. Well, maybe there's a worse place, right? This high. That's one of the worst. Or anytime you have equal highs like that the worst place to enter the market. It's just the worst. So I'm going to stop harping on that because I've harped on it so much. I'm pretty sure you guys don't do it anymore. So it's counter to the natural human instinct, which is preservation, right? I want to preserve my capital. I can't sell that. It's going right up. That's why you have to sell it, because retail won't sell it, right? The average trader won't sell it. What are they going to do? They're going to buy the breakout. All right, now, but let's say we break here. Oh man, broke the supply zone. Now let's be clear here. Supply and demand zones are being created all day long, right? Depending on what time frame we lay, they're all over the place. So we can't just take them just because they're there. It has to make sense, and it has to fit in with all the other analysis that you've already done. Do you want to take that trade there? Well, that risk reward here is pretty friendly, right? So, and that's not even your target. Your target is down here. A 7-to-1, I take that all day. Right? And just to add a little conviction to it, not a guarantee, because certainly that could still it could do that. But if you're up here, at least I know that's the strong high. Do you see that? Because that's the high that did its job. Right? So if I'm going to break that, what have I done? Right? I've got to change. I've got a change of character. Right? That swing structure has broken. Now, we don't get a full break of structure until I take out that high. But, right, this is telling me things are changing. My point being, right, as I've taught you guys like to think, right, we come back here, you're once again, right, so they're all the more, right, all the more. Because here's even if retail, oh, fuck, where was I? Even if retail drew that and they were just doing a fib retracement here, I guarantee, very low probability they would know to do that. And then now what are they doing? They're buying right into the golden zone, right? Even though we clear this might just do it in wick, just enough to get into the golden zone, which is why you want to have that set to close only, right? We're seeing that more and more, wicks going through the 65 and then ultimately getting to target. So this is just a great example, because retail is going to buy it, not knowing they're buying right into a golden zone, right? So just some things to keep in mind here. Again, we want to just be mindful of everything we already know, right? This is not a replacement. This is to augment, not to replace. All right, so I made my point there. How am I doing on time? Oh, shit, 42. God, I always think I'm going to do them faster than I can. Okay, let me keep going here. Okay, we've been through. All right, so let's get back to the fibs. So I have them turned off. I typically keep them on. You can have both numbers as well as, first show them, and then second, do you want the numbers? Well, because mine are all the same color always, right? 50 is always red, gold, 618, and the 786 is blue. I don't need to see the numbers. I don't need that. It's just one more thing to clog up my chart. I don't need it, but I would keep it like that. So it does a couple of things for me. One, at a glance, I know what the trend is within this swing set. If here, let me get everything off there. If I wasn't sure for whatever, or I was down on something very small time frame, and I was like, oh, wait a minute, okay, where am I? What's the last thing I'm looking for? Well, here I know that if I'm retracing back towards the 50 in the golden zone, that this is my premium. So that's what I'm looking for. It's just a nice kind of handy. All right, where are we in that retracement? Quick at a glance, downtrend, uptrend, right? If you didn't, for whatever reason, you couldn't ascertain where it was, or this was a swing and you didn't have the low yet. Well, now I know I'm retracing and the premium zone is up here. Again, I encourage you to keep it on. But of course, we've gotten so used to drawing our own fib swings, you may or may not want to use it. At a minimum, I would encourage you to maybe put the 50 in the 618, just so you know when you're in premium. Now, if you're just doing 50, right, it doesn't give you as much of it. Then you're going to have to spot the strong and the weak to know which side of premium or discount you're on, which is why I keep the 3 on. I say it's not, it's not going to really wreck my chart by any means. All right, let me keep going here. I'm almost done. Okay, so I would keep those on. It's up to you as to whether or not you want to show the numbers or not. I don't. Okay, now, so this is a fair value gap. So let me find a couple here. So let's show them. There we go. Got them right there. Okay, so let's go look at that. All right, so what is a fair value gap? Okay, so all it's simple and but smart, right? It's the distance between this low here of this up bar here when I have a gap between the close of this bar and then I go to the next bar over if there's a gap between this close and this high. When in this case, because it's a downtrend, the gap between the two is called a fair value gap, because what the insinuation is here is that the market has moved so quickly away from it is that there's likely to be unfilled orders in that. So if we come back to it, likely what you're going to find is some onboarding here for people that missed the first round or didn't get all the volume that all the size that they wanted on there. That's a chance for them to reboard. So it's a place to look for potentially a reaction as those orders get filled, and it's kind of a secondary location here. And you could do it. Let me show you a couple of examples here. You could extend them if you wanted, right? So now you got them really in your face. Pull back here, right? So these are fair value gaps that the market has left behind, and just like many gaps in the market doesn't like to leave a vacuum or a gap. So this whole move here is all potentially just retracing into all of that potential price action here. So something like that, right to the golden zone here, right at the edge of the fair value gap. Now, is that enough to trade off? Well, I don't know that I would trade off of it just off of the fair value gap. But if it's fair value gap and I've got a golden zone there, yeah, I'm interested. I'm interested. All right, so if I'm going to come back up here, I do it like this, and I come back here, and I'm at a fair value gap, perhaps a front run on the golden zone. Where's my target? Well, here's the strong high. Here's the weak low. That's a reasonable target. Could I get second? Well, like if I'm heading towards second, well, I got a little gap down here. If I'm going to get third, right, all the way come down here, I got little gaps down here. Now, it may be too much to have that all on. Right, and you can fade those colors if you like, but it's just, I prefer myself, right? Because once you get used to seeing them, they're fairly easy to spot. But if you were just doing some broad-based analysis and you're looking for points of interest on the chart, that might be a thought to extend them. I think the way they give you that option here to just have it here. Let me get rid of the drawings. Just have it show on the chart, and you can change that color, make it fatter, brighter, whatever you need. Just it's to be aware, right? Particularly on shorter term things. Often, right, it's just gone so fast, right? If it comes back to this nice onboarding. So here you've got one right before that supply zone here would be another area of interest here as you're coming back into it. Let those people get on board, and then back down it goes. All right, so I think I covered everything. All right, so just to refresh, right, so we come back to focus mode, on, off, right, depending on, it's just personal preference here. I would encourage you to maybe start. Well, I'd go back and forth. That's what I'd do. And I did, right? I looked at it back and forth, and I find that I prefer to just have it focused on on the hard right edge. All these do a little experimenting, but not a bad thought to start with bullish breaks and bearish breaks of structure. Swing structure here, we've been through that. 25 is a good starting point. Again, just do a little experimenting with this. Now, so all of that I think that covers us on everything. So with all of that said, let me encourage you to, if you're going to pursue this and get involved in their trial, they do have a fairly active Discord as well. So I would encourage you to get on board with them. If you're pursuing this and you're adding this into your trading arsenal, there's good educational content there. They're all very friendly, good group of guys, and we've got a good working relationship with them. So you'd be very welcome in that Discord, and might be a place for you to pick up examples. Certainly, you're going to see a lot of FX, as this is very popular amongst FX traders, right? So you'll see a lot of it in FX, and we'll get to some FX examples. I just wanted to show you guys in crypto as well. It's valuable on any asset. But I just thought we would focus here on crypto, right? So many of you guys like it. And I would encourage you to look beyond. I mean, we're doing this out on a 4-hour here, but you can take it down to a 5-minute, 1 minute, right? Same difference. If you go down to a 5-minute, let's just see how it looks here, and I'll wrap it up here. So some of you know that we've developed our own set of tools like this over on Ninja, where we're trading primarily off of 1 minute. All right, so it's very effective for day trading. We're probably using a variety of time frames here, but for execution, we're doing it down on the 1 minute, so you can do the same thing here. You can get it right down to a 1 minute. Oh, what do I got here on Bybit? There'll be enough volume here. All right, strong high, weak low. Retracing here on a 1 minute. Retracing, here's my premium zone. Oh, where's my box, right? So here we get up above here. Jesus Christ, that's the most annoying thing in trading. We get up here, premium. Right, now how would you want to approach that? I mean, that's a long way to go to get up to that, right? So which is what makes this both effective as well as, well, you'll experience it, right? So the market is going to be doing this, right? And you're going to say, I can't sell that, man. That's ripping right up there. Well, one thing we can all agree on: you don't want to buy it there. Who's going to buy it there? All right, we've been through that enough, I think. All right, they'll buy it. Oh, breakout. Right, because they don't know the golden zone's there. Okay, guys, I think that covers you. That give you enough to get started with. Do some experimentation. I wanted to get through this video here so you guys could start dialing in, working with the trial. Once you've done a little, trial and error with it here, I would encourage you to do a little, sim trading, or what do they call it on TradingView? Paper trading. I would consider you to do a little experimentation with it. All right. Now, one thing you are going to see, let's be very clear, zones are breaking all over the place. All right. So choosing zones is, half the battle. Just like choosing, it would be just like measured moves, right? There's always an algo on the other side. So we're picking one that we're trading based on context and all the things that we talk about and have talked about, since we started teaching. Same thing happening here. And of course, you always have the option here to turn it on and off, right? So just, do this. All right, I'm going to do some wave analysis. Now I'm going to bring this back on. See, how does that fit with what I'm seeing? All right, guys, there you go. Have at it. Hopefully that gives you enough to get started on it. And feel free to, well, we'll probably post a dedicated channel to this over here as you guys are experimenting, and I know you're going to have lots of questions and why is this and what about that. And so we'll put together a dedicated channel. Monty Crypto is also getting very, very well versed in how to use this, so I think you'll see that start to appear in his analysis as well. So with that, let me wrap it here. I was hoping to do it in half an hour, but there's 52 minutes. Okay, hopefully plenty of things to chew on, lots of things to experiment with. Don't forget to use the code that we give you here. You won't get that discount, right? That would be with regards to the trial, as well as if you decide to make the purchase, right? I can't help you if you don't use our link, right? Off you go. Now, in full disclosure here, I should note here, we do get a small kicker on that. I mean, at this price point, you can imagine it's not a get rich play, right? I just think I think it's something that can augment what you're doing in an effective way. So hopefully you guys have good results with it. With that, I'm out of here, and you guys knock yourselves out. And please, all the feedback is always welcome here. Very curious to see how you guys get along with it. Okay, with that, I'll wrap it and talk to you.